in the morning, so we're looking at Thursday night's close. We haven't done for a couple of weeks because of Easter. We had the Easter break, and we're looking at November 2015 UK wheat chart, and we're starting with a daily bar chart of a Twitter page I put out on Thursday, which is yesterday, just to show that on the UK wheat market we're testing the 6-day moving average. I've done some work which I'll show you in a minute on the weekly chart, showing a port level 133, which are unable to break through at the moment, and obviously we'll be looking at this big Mazubu candle here, which broke through the 6-day moving average, bearish sign gave us, and we're looking for the break here of these swing lows here at 129.50. If you just pop down here, you can see the review of what's happened this week so far. You can see here that over Easter we've had, since we've come back by Tuesday, Wednesday, Thursday, we've had 3 falling days, still falling below a falling 6-day moving average. We were looking last week's report to see if we could maintain and hold 6-day moving average. Obviously, unfortunately, this looks like to crumbled away. We obviously had this big red candle here, very bearish sign through the 6-day moving average. Came up and tested the top of it, 131 here, and we failed that, and we've come down again to test the base of the bottom of this Mazubu candle, bearish candle, got a falling 6-day moving average, and we've got a falling RSI. So it doesn't look good at the present moment, but obviously we'll go down to see what signs we can see as we go through the other charts. This is the monthly chart here. I marked on here the 133, lower trend lines down here at 110, and obviously we're forming a bit of red candle here on the monthly chart, nothing much to see there. On the weekly chart, this is a 60 weekly moving average, sorry, the 20 weekly moving average, get that right, and you can see that we unfortunately have broken through that beginning of the year, came up and tested it, failed to break through it again, and we're on the way down. Every time we've seen a break over the last 2 years, we've seen a move between 30, 40 and £18 a tonne, obviously, so it is crucial that we make some headways against this signal at the present moment. Then this is a chart I put out on Twitter on Wednesday, just did some work over the bank holiday weekend on a Elliott wave study and obviously Fibonacci retracements, and I came up with a level of 133. This seems to be crucial over the last 4 or 5 years on retracements and whatever. We've got a higher low in place, and obviously at the present moment we've made a higher low, lower high at the present moment. So it sort of cancelled itself out. We're still in this turning point here, looking for clues on direction. Now this is coming down into the daily chart. Move this out a bit so I can be seen. Hang on. Right, here we go. And right, okay. And this was trying to put some arguments about where we are on the daily situation at the present moment. And you can see I've got a plan A and a plan B, because I can see both sides of the argument at the present moment. The plan A is for the market to keep falling, and I've got a sort of count down to the lower trend line on that monthly chart down to 110. I've got a falling 60-day moving average, which we've indicated over the last 2 or 3 years is crucial for this market to hold. We've got a lower high in place, this big high here, and we've now put a lower high here, one over Easter. We've obviously had a big Mazubu candle here on the rejection of the 6-day, which is bearish, and we're below the RSI. On the plan B, which is obviously in green, which is the bullish side, we've got to recapture. I'm putting here this 133 line, which comes off the weekly chart, and obviously markets don't go straight up, so we've got to put some ground in. Then we've got to break through the high of 135, or where we are at the moment is the bottom of this swing low here, and we now find support here, and we put in a double bottom, and then got to challenge the swing high at 135. But on the bullish argument, all I can find at the moment is a higher low and the trend line down here, which would not give us support until sort of 127, 125. So that's telling me in the short term we could see £3 or £4 on the downside before we find some support. So at the moment, on this indication of looking at this technically, I would have to go with the A scenario, we're below the 6-day, we've had signals, we're not holding it, and we're falling below the RSI. But I'm always very wary, as I said in my last week's report, when the UK is off, that we've basically been off 2 days, and obviously these indicators like the 6-day moving average is a lagging indicator, we're actually 2 days behind the US market, and I do not think we are now going to get proper signals using the lagging indicators until the end of next week. So therefore I turned and had a look at the US market, and suddenly it it looks completely different. You can see here that we've got a head and shoulders basing pattern forming on the US market. On the 60-day moving average on the US market, you can see that the prices have actually broken up above it, have now come down to test it here at 518 and are holding it. The RSI is moving up and is actually just holding above the 50. So you can see how we've got a difference in of opinion re the what's happened on the UK and US. Now who's right and who's wrong? At the moment, if we take this head and shoulders pattern, a basing formation pattern, we've got a projection rise of $30 to $40 up to $6 a mark, $6 a bushel mark. So let's overlay that on the UK market, and this is with our scenario here with possible head and shoulders forming on the UK market, and you can see how suddenly that we've looked completely different. And you can see here we've got left shoulder, we've got right, and we could be just at the bottom of this right shoulder at the present moment. So obviously I've had to put a plan C in base at the present moment. So unfortunately I started my looking at the market thinking, yeah, I know what's happening, all the indicators are pointing down, we're heading down, we're going to take out the swing low, and we're heading down to 110, and that backed up by all the indicators. The B argument looked very weak, because obviously all we got was a higher low of the trend line, but on the C now, with this possible US head and shoulders, which is a basing pattern, and then you overlay that on the UK, we have still got possibilities. So unfortunately, I'm going to have to sort of bow out of this and say that at the moment, until we clear this 133 or this 127, I cannot give a definite calling of which way I'm sort of swinging at the present moment. I started with A, I'm now going to C, and my feeling is that obviously the US market will give us the leading, because obviously we've had the Easter break and we've been away. So therefore I think that is probably where we're getting the false signal on the 60-day, but obviously can't predict, we'll have to watch and let it unfold for first half of next week, and probably look about Wednesday to see if that gives us an indication, and I'll put an update this time next week. Thanks for watching.